Welcome to Countouts. In this lesson, we're going to be looking at the amortization schedule. We're going to look at how to do the calculation, and you will see why we even do an amortization schedule. It tells you specifically how much is allocated to interest for every period that you are paying back the loan, whether you're looking at a car loan or a mortgage, and we're going to look at those examples. So we're going to start with a very simple example and look at the car loan and also look at the mortgage loan. And we are confident that after this lesson, if you don't know how to do your amortization schedule, you should be able to do it quite simply using Excel. And you will see that it's very important, especially if you're looking at your mortgage loan or your car loan. You will see how your interest and your principals are paid during each period and how much is allocated to each. And you will see at the end of the day, how much have I paid in interest, or how much will I have paid for interest as a result of taking out this loan. Right, so let's get into it. If you'd like to skip to the car loan example or the mortgage example, you can find the timestamps in the description below and you can go to those lessons. But if you'd like to understand it thoroughly, we start with this very simple example in how to do this. So let's read. It says Equity Bank grants you a loan of 49,800 Rand on the 1st of January 2022 that is repayable in 5 annual payments of 13,815 Rand at an interest rate of 12% per annum. So the first thing that we need to do is just to note down our information, and that will simplify our calculations and doing our formulas. All right, so the first one I've put there is the loan amount, which we are given 49,800 Rand. The second one we are given there is the interest rate, which is 12% per annum. And you will see in the example that is to follow, they did not give us an interest rate, and we'll have to calculate that, but it's quite easy to do so using Excel. All right, and then the payment we are given here is 13,815 Rand. Sometimes you're not given the payment, but we will look at that as well. And then the payment period is 5 years. Okay, so we note here that it's going to be paid in 5 annual payments. All right, so we are repaying annually and not monthly. In our examples to follow, with the car loan, we know that we pay that monthly. With the mortgage, we know that we pay that monthly as well. We'll do that. But this one here, I wanted to start the simple example just for you to get an idea of what an amortization schedule is and how to calculate it. Now that we've taken account of all the information that we need, or the important information that we need, we can begin with our table. The first thing that we're going to note down here is period. All right, so how many periods do we have? We know that we have 5 periods because we're going to be making 5 annual payments. So we begin with our column for period, and then the second thing that we have here is the payment. How much are we actually paying, or how much are we having to pay during each period? We know it's 13,815 Rand. Then the third one we have here is the column for interest. All right, so how much is allocated to interest? And then the fourth column we have is the principal payment. So we will put down here the principal payment. Okay, so these two columns are extremely important. In fact, that's why we're even creating an amortization schedule, the interest and the principal column. All right, so you will find that the total of your interest and your principal column for each period will equal the payment for that specific period. So if you add interest plus principal payment, it will give you 13,815. But the question is, how much is allocated to interest and how much is allocated to principal payment? Well, that's why we are doing the amortization schedule, to see that. All right, and then the last column we have here is the balance, how much is left at the end of each period. All right, so you might put here balance or closing balance to see that this is the end of the period. Right, and there's no one way to do this. You might have seen, or you might see examples which are slightly different, but you will get the exact same result. All right, so period, we'll start with period 0. That's what I like to do. I like to start with period 0 because I want to see how much I owe at this specific date, or at the date at which we are taking out the loan. All right, so we know at period 0 the closing balance, or how much we actually owe, is the 49,800 Rand. All right, because that's how much you've just taken. If you don't want to start with period 0, you might start with period 1. That means you might add another column where you have your opening balance. All right, but I like to do it this way. It seems simpler for me to do so. All right, and then we can put the rest of our periods. We know it's for 5 periods, so I put 1 there, and then I go to the bottom right of the cell, and then I drag it down, and then I select fill series. All right, and now it has calculated for the 5 years. All right, so now I have the closing balance at period 0. Now I know that is the opening balance for period 1, obviously. And then now I can put in my payment. My payment begins at period 1. At the end of the first year, that's when I'm paying the first installment of 13,850. So I will select 13,850 and I will lock the cell. Now, if you've heard that word before, locking the cell, I just press the cell and then I press F4. All right, sometimes you might have to press FN and then F4, or you might just have to press F4 and you will see the dollar signs before the column letter, which is C, and then before the row number, which is 8. All right, so I'm locking the cell so that if I drag it down, it's going to be the exact same number. So you will see that here, and you must understand what locking is because you'll have to lock it also for the other columns. So how do I do that? Well, like I said, you press the cell that you want to select. In this case, we selected C8, and then we lock the cell by pressing F4. Okay, so usually you'll have to press F4. If it doesn't work, you'll have to press FN and then F4 depending on the laptop that you're using. Okay, now that you've locked that cell, what is the interest rate? Well, we know that we are being charged 12% interest per annum. So we're going to take the 12% and multiply that by the closing balance of the previous period, in this case period 0. So it's 12% times 49,800, but I'm selecting this one here in year 0. All right, but what I want to do is to lock this C7, which is the interest rate. All right, so that when I drag it down, it will stick to that interest rate in that specific cell, which is C7. So I'm going to press F4 and then that locks the cell for the interest rate. Okay, so let's do that again. We will press the equal sign, you select C7, and then you lock that cell. You can lock it before you multiply. So let's lock it, and you can see the dollar signs on both the row and the column. You must see the dollar sign on both the row and the column. Sometimes it will lock just the column first, so you'll have to press F4 twice for it to lock both the row and the column, or it might lock the column first, so you'll have to press F4 twice. So just make sure it's showing two dollar signs, even for the payment that we've just done. All right, and then we multiply that by the closing balance of the previous period, in this case the closing balance of period 0. All right, once we've done that, we press enter. Okay, and there it has given us the interest rate. And now the principal payment, well, we will take the payment that we make every period, or the installment, and we minus or deduct the interest, and that gives us the principal payment. And then the closing balance is the closing balance of the previous period, which is the 49,800 in period 0, minus the principal payment we've just made in period 1. All right, so it's only deducting the principal payment, and that is what the principal payment is how much you're paying towards the loan. The rest is paid towards interest. So we want to see how much is paid towards the loan so that we can see what the closing balance is. Okay, so you take the closing balance of the previous period minus the principal payment of the period 1 here. So we press enter and we have 41,961. All right, if we've locked everything correctly, then we can just select our columns and then drag it all the way to the final period. There we go, and you can see how much is allocated to interest during each period and how much is allocated the principal payment during each period. And your closing balance, or the last balance here, you can see it's showing 0.03. It's just a rounding off issue, but other than that, it should show 0. All right, if it shows something like mine, then you've done everything correctly. Once you've done, what I like to do is just to total up my interest column and my principal column. So I will total them up. So you can click on equals and then sum and then open bracket and then select your interest from period 1 to period 5 and then close the brackets and then enter. All right, and you do the same for principal payment. What you can do is just copy and then paste, and it will do the exact same thing. It will apply the same formula, and you can see the answer here should be 49,800. all right, you can see here 49,800. If it shows you 49,800, obviously here we have 3 cents balance, but that's just a rounding off issue, and that means we have done everything correctly. So we've paid the entire loan by the end of year 5. Okay, so that is how the loan amortization schedule works and how you do your columns. All right, and how you apply the formulas to doing your columns using Excel. Now that we've looked at this first example, let's look at the car loan, all right, which is more realistic, which usually happens, all right, in a real life situation where you're paying monthly. Okay, so let's have a look at example 2. So here I've already noted down everything. Okay, we've got a loan amount of 250,000 rand. We've got an annual interest rate of 12.86%. So you will see in your vehicle agreement, you'll probably see the annual interest rate, and they will give you something like 12.86. So this is the annual interest rate, remember that. And the payment or the installment is 5,000 rand, all right, and this is the monthly repayment, and the initial payment date is the 1st of January 2022 for this particular example. And how long is it going to take you? Well, it's going to take you 6 years, all right, and 6 years is equivalent to 72 months, all right. So if you take 6 times 12, it will give you 72 months, all right. We need to get the monthly interest rate. We are given the annual interest rate of 12.86%, so we need to get the monthly interest rate, right? And we know the payment period is obviously the 72 because we'll be paying it off for 72 months. Okay, now that we have that, we can get our monthly interest rate by taking our annual interest rate of 12.86 and we divide that by 12. All right, we will need this because we need to know how much we'll be paying for interest during each specific month. All right, now that we have that, it should be easy for us to do this. Well, we know that we start with period 0, as I mentioned in the previous example, so we put 0 here. Okay, and we know that the balance at period 0, or at the date at which we are taking out the car loan, is 250,000 rand. So I'm just going to select that. Okay, now that I have that, I press period 1 here. Okay, and then what I'll do is I'll drag it down. So we need 72 months over here. So if I fill series here, okay, let me just zoom out. You can see we have, okay, 61. Let's keep going. 72. There we go. Okay, so we know that we will be paying this off over 72 months. All right, now that we have that, let's put in the rest of the information. All right, so the installment here is the 5,000 rand. We are given that amount, so I select 5,000. And then how much will be paid for interest, or how much will be allocated to interest? Well, we need to do exactly what we did in the first example. We press the equal sign and then we press the monthly interest rate. Very important, you press the monthly interest rate and not the annual interest rate, because you'll be paying this off on a monthly basis, unlike the first example, which was easy enough. All right, where you're paying it off annually. Here you'll be paying on a monthly basis. So you select the monthly interest rate. If you don't have, obviously you'll take the annual interest rate like we've done, divide by 12. Okay, now what I'm gonna do is to lock that cell. All right, actually I didn't lock my installment cell, but I'll lock that just now. You press F4. You might have to press F4 twice if it just locks either the column only or the row only, for you to see the $2 sign. So make sure that's what you're seeing, as I explained before, and then you multiply that by the balance of period 0, all right, or the previous balance. So we press the 250,000 rand, which is the previous balance, and we press enter, and there it has given us 2,679 rand. Okay, so let me go and lock my installment cell. So I selected cell C8, so I'm just going to lock it and make sure that it locks both the rows and the columns. Okay, and press enter. Okay, now what is the capital? Well, if you looked at the previous example, we'll take the installment minus the interest, and it gives us the capital of 2,320 rand, which is the balance of the two. Okay, and then what we have there is the balance. What is the balance? Well, we'll take the 250,000 rand minus the capital, all right, as we did in the previous example, and there we go. Now if we've done everything correctly, we can just drag it all the way to the end, and it should give us a balance of 0. All right, so let's go and see what it gives us here. So the 2 months, and there we go, it has given us a balance of 0. That means we did everything correctly. If you want to do sanity check, what we need to do is actually to total up and see if we did everything correctly. So we're going to press the equal sign and then sum, open bracket, and then select everything from period 1 to period 72 and close bracket and press enter. Okay, so that means we've paid interest of 110,000 rand, and then we copy and then paste in the next column, and you can see we've paid 250,000 rand, which is how much we owed. So that is the principal payments that you've been making. Another thing that you need to pay attention to is obviously your interest rate. You'll be paying your highest interest rate at the beginning. Okay, so as you pay off during each period, your interest rate will be decreasing because your balance is getting smaller, because you're paying more and more toward your capital. All right, so that's how the loan amortization schedule works. So if you want to see how much am I paying, period 1 you're paying 2,600. Actually, majority of your installment, or most of the money that is being paid, is going towards your interest. All right, but as you keep paying off, you'll see that your interest rate gets smaller and smaller until you complete paying it off. And that's how a loan amortization schedule works. Okay, so now let's look at the last example, which is a mortgage. So let's look at example 3. Here we have the details here, so it makes it quite easy for us to do. We have the loan amount of 900,000 rand. we don't have the interest rate. So in this case, we'll have to calculate the interest rate. We have the payment or the installment, 8,500 Rand. We have the initial payment date. So the initial payment date, you don't have to put it, but you can put it there just to know when is the first date at which you're paying your loan. So if you're looking at your mortgage loan, then you can use your actual details to see how much is allocated toward interest and how much toward capital by doing the amortization schedule. Okay, 20 years, all right, that's how much the mortgage loan is for in South Africa on average, all right. So you can go to 30 years, so you can put your details there. And then the months we have here is 240, which is a 20 years times 12 months, and the payment periods is obviously the same as the month. So you don't have to put the months and the payment periods, you can put one of them, but I just put those details to show that we have 240 months, but we're actually paying the full 240 months, all right. And then we need to calculate the monthly interest rate here, all right. We don't have the monthly interest rate. You may be given the interest rate, otherwise you'll have to calculate it, or if you're given the annual interest rate divided by 12 as in the previous example. So let's get our monthly interest rate. You press the equal sign and then you type in the word rate, okay, and you can see it comes up there, and then you open the bracket. And then the first thing that you put there is the number of periods. The number of periods here is the number of months that you will need to pay off this mortgage loan. All right, so you press 240, or you select 240 there, okay, or you type it in, and then you press the comma, and then the PMT is the payment. How much will we be making during each month? Well, it's the 8,500 Rand. So you can put that as a negative. If you put the payment as a negative, you'll have to put the PV, or the present value of the loan, the 900,000 Rand, as a positive. So the payment and the loan amount cannot have the same sign. One must be a negative and one must be a positive, otherwise you'll get an error. So let's put the payment as a negative, since that will be leaving our bank account, we'll be paying it off. And then you press the comma again, and then you put the loan amount, which is the PV, which is the present value, how much you're receiving today. Okay, since I put my payment as a negative, then that means that my loan amount or my present value will be positive. And then I press comma again. What is the future value? Well, the future value here is if you have a balloon payment for a vehicle finance, for instance, then that's what you would put there. But in this case, we have no future value or how much we'll have to pay at the end of the period, so we put 0 there. Or how much you'll have to receive at the end of the period, there's nothing that you'll be receiving. And then you press comma again. The type, when are we making this payment? Are we making this payment at the beginning of the period or at the end of the period? Well, we know to make our mortgage payments at the end of the period, or at the end of the month in this case. So we press 0 there, and then we close the bracket, and then we press enter. And you can see there we have a monthly interest rate of 0.81%. If you want to see the annual interest rate, then you can just take that monthly interest rate that you've just calculated and multiply by 12, and you can see how much you're paying every year. All right, but this is the monthly interest rate we'll be using. This is the interest rate we'll be using to do our amortization schedule, because we'll be paying everything monthly. Okay, so period, again, we start with period 0, so we'll move a bit quicker here. Period 0, and the balance here is how much loan we took out, or how much money we owe for our mortgage. It's 900,000 Rand. Okay, and then we put period 1, and then I put period 2, and then I can just drag that down all the way to 240. So let's keep going to 240. Then I fill series. Okay, so let's see. We have 240 here, 238, so 2 more. Okay, I've put in my 240. Now let's put in the installment. How much will we be paying during each period? Well, we know that the installment is 8,500 Rand. So I select that payment, 8,500 Rand, and then I lock the cell. Remember, it has to show the $2 signs, and then I press enter. And then what is my interest rate? Well, we know that, oh, what is my interest? How much will I be paying for interest? Well, we know it's the 0.81. Remember, you take the monthly interest rate. So you select that cell where we have the monthly interest rate that we calculated, and then you lock the cell. Remember to lock, and then you multiply that by the balance of the previous period. In this case, the balance of period 0, which is the 900,000 Rand. And then you press enter. Remember that you don't lock, all right? You don't lock the balance. And then you go to the capital part, and then you take your installment, 8,500 Rand, minus your interest of 7,266, and that is how much goes to capital. And you can see during the early days of paying back your mortgage, you can see very little is going toward paying off the 900,000, but the majority is actually interest that you're paying. Okay, and you will see the value of actually paying extra towards your mortgage, especially in the early days of taking out your mortgage. You'll find a link to an example where we show you the same loan amortization schedule, but what happens if you're making extra payments? What is the effect on your interest, and how long is it going to take you? You'll pay it off in a shorter period than your actually repayment period. So if you'd like to check out that lesson, you'll find it in the link in the description below. Okay, what is my balance? Well, I'll take the previous balance, 900,000 rand, and we deduct the capital portion, 1,233. So you can see after paying the first installment, we've barely paid anything towards our loan or our mortgage. All right, so let's select everything. If we've done everything correctly, we can just select everything and just drag it down all the way to the end. Okay, so I selected the last cell that I had selected, and then I went to the bottom right of the cell, and then I just double clicked, okay, and dragged everything all the way to the end. And you can see at the end of 240 months we owe 000. All right, that means we've done everything correctly. Again, we can do another sanity check by just totaling up our interest column and our capital column. You can even total up your installment column to see how much have I paid in total. Okay, so let's do that. You can go to the end and then select here the first cell. All right, that's for our installment. We press equal and then sum and then open bracket and then select everything from the top, all right, from period 1, and then close bracket and then press enter. Okay, and there it has given us 2,040,000 rand, and then you just copy and paste it to the other columns, and it will give us how much we've paid toward interest and how much we paid towards the principal. Obviously, we know the principal is 900,000, but you can see we've paid more than the principal payment, or more than the loan amount that we took out toward the interest. So that shows you how much interest you're actually gonna pay to buy the house that you've bought or to buy the car that you've bought. Okay, and in total we've paid back 2,040,000 rand by the end of 240 months. But like I said, if you'd like to check out that lesson, it's very interesting to see what happens if you're making extra payments over and above your installments or your required installments every month. Okay, and that is how a loan amortization schedule works. I hope it has made sense. I hope you've gained value from this lesson, and if you have, consider subscribing to our channel, like this video, and share it to those who think it might help. And also check out that example for extra payments. Till next time, cheers.